What's up everyone, Eric here again. Long time no see. I decided I needed to take a break and kind of reevaluate what I was doing here, and frankly if I had enough time in my daily schedule to maintain a channel like this. Long story short, I'm getting back into it. Probably going to post less often, but I'm still hoping to do a couple videos a week. And then also I'm going to start tracking this account here, which has gotten into some trouble. As you can see, the PL or profit loss for the year to date, so for 2021, is down $21,000. I'm going to implement this system here and see how well it can recover this account. I'm going to document things along the way, and hopefully you and I will learn something together. All right, so the trade alert for today is in ARKK, which is ARK's ETF Trust Innovation Fund, or ETF. And I sold the June 18th 104.96 put. I'm not sure why it's such a weird number like that. I'm just gonna call this the 105 put for simplicity's sake. So I sold to open the 105 put for June 18th 2021, and I collected $3. If we check out the trade tab real quick, the typical entry for this system is 30 to 60 days. This is at 29 days. If you really felt like getting into this May expiration, you could. However, over time, I don't really like doing the 30 days. I try to stick more like 40 to 60 days, or like 40 to 70 days even. I just like to have a little more time, even though I might be in the trade a little bit longer. I've just seemingly run into trouble with opening trades around the 30-day mark, or even under like 40 days, because if they go against you, you don't have enough time to recover and ride it out before you're rolling out to the next month, which is technically a loss, right? And I kind of don't roll anymore either. That just makes things confusing. If I lose a trade, I just lose it and I move on. It's more simple, right? This whole system is supposed to be simple and straightforward, where anyone can do it, right? So rolling just makes things complicated. Opening trades too close to expiration makes things complicated potentially. So anyways, 30 to 60 days is what this system goes by. It's basically what Tastyworks goes by. However, my preference is I like more 40 to 60 or 40 to 70 or 75 days. Again, I might be in the trades just a little bit longer, but in general, in theory, that gives me more time to recover if a trade goes against me, right? So this 29 days, I wouldn't do that anyways. It's just not enough time. So I'm looking at the June 18th window here on 57 days. And then I went with the 105 put, or the 104.96 put here. And I sold that for $3. I did this earlier and today. Right now it's after hours, and it looks like it's gone against me a little bit. It's now asking $3.15 as the mid price. So if I sold to open this trade right now, I could collect roughly $3.15. That gave me a pop of 79%, P50 of 88%. That gives me a max profit of $315 if I held this all the way to expiration, but I don't do that. On naked puts like this, I take profits anywhere from 40 to 70%. Usually it's a little on the higher side there, closer to like 60%. Only on naked puts. When I do strangles, I'm more like 50% or even less. In theory, you can take profits whenever you want. Anywhere from 30% up to 70% would be a reasonable spot to take profits. So I guess you could say roughly 50% of the max profit is where you would take profit. Anyways, and then this takes up a reasonable amount of buying power here at just over $1,000. So that's not too bad. And my entry guidelines here are basically, you see this little orange line here on the side here? That is the expected range of price movement for this timeline. So I basically pick just outside of what's expected, right? So this is, in theory, they claim this is going to go to 105.96 or 106, right? So I went to the next strike out, which is $1 lower. That puts me right around the 21 delta. I think when I opened this, it might have been only the 20 or 19 delta. Either way, for these naked puts, I usually end up right around the 20 delta. Sometimes I can get out to the 15 delta. It just depends what you want to do and how aggressive you want to be. I mean, really, in theory, I should be going out farther to only collect about $2 instead of $3 here, right? So if you go out to $2, I mean, you're way out here at the 15 delta, or maybe even the 14. Come up here, $1.95. You know, you come way up here to the 14 delta and collect roughly $1.95. That puts you to 87% pop, right? And it only ties up about $1,000 in buying power. In my opinion, anywhere outside of this orange expected range is good to go. And you know, some people go as high as the 30 delta. That's usually a little too aggressive for me. I like stuff more out here at the 20 delta, or even way out here, you know, at the 13, 15. Sometimes you go way out to the 10, you know. So whatever you want to do for as aggressive as you want to be, I went here. Let's delete that. And yeah, I am expecting to be in this trade roughly 2 to 3 weeks. I'll follow up and post a video on what happens. And then also I'm going to start tracking this account here. The net liquidity, which is kind of your overall balance, is just under 43,000. It actually did close the day, and then after hours it dropped like, what is that? Almost $30, $27. So I'm just going to call that $43,000 on, what's today's date? April 22nd, 2021. And I'm going to start tracking that going forward here. And then I will post these trade alerts, and sometimes I will post, you know, a breakdown on a stock or the overall market or whatever. So, all right, I think that covers everything in Tastyworks. Let's look at the chart real quick. All right, so I sold the put here today, and I sold the 105 put, where 105 is down here. Current price is right around 121, and I just want the price to stay above this line. It can go down a little bit, it can go up, it can go sideways. I just need it to stay above the 105 and I'm good to go. Quick little breakdown here. You know, MACD is increasing, RSI is neutral to increasing, and that's what I want for a put, selling a put. And then also for Elliott wave, the 5th wave topped out here, and then there's a big ABC correction for the intermediate time frame. And then now it's starting a minor time frame, and then we've had a 1, 2, and then 3 should be up here in somewhere. And that's basically what I'm shooting for. So as long as this projection holds true, I'll be good to go. Now, if it breaks this level here at roughly 109, I would maybe consider bailing on the trade, but I'll cross that bridge when I get to it. Otherwise, the Elliott wave, the MACD, and the RSI is all shaping up pretty nicely here. And yeah, that's about it. Okay, thanks again for tuning in, and I will catch you in the next video.